day through this process. Every single time you guys are on with me, we'll learn something and we'll get better. Mandy's just let me know that she's so tired after the lunch that she had. She wants to go sleep now. I'm kidding. Mandy's still here, everyone. When do we reassess the curve? For example, in the downtrend, should we draw a new high time frame supply curve for when a zone develops? All good questions. I am going to cover right now. So I set this up first. Let me quickly just replay that all there. Okay, again, this is just a Euro chart. A chart is a chart is a chart, right? Doesn't matter which chart you're on. I'm just trying to actually draw the curve to kind of clarify something here. Manny says, I do need more coffee. Are we taking a short break soon? I will do just this example. We'll take you know what? Let's do this. Let's take a 5-minute break right here, and then we can keep all the curve stuff in one go. Can we do that? Right? I'd like to practice gold, silver, or coffee. Yeah, the chart. Listen, any chart, we can do any chart is exactly the same stuff. Right? All I'm trying to do is not mess up all my markups that I haven't yet saved. And because I have a tendency to clear everything and then have to go and spend 20 minutes, 15 minutes redrawing all those stuff again back onto the chart. And then I spend 20 minutes frustrated at myself for clearing all the stuff that was on there because I believe in saving all the stuff, right? What's that, Chadwin? I couldn't do your job. Oh, bless you. What job? I'm not sure what you mean, Amy. Okay, see you all in 5. Oh, teaching 100 people? No, I'm only Amy. I'm only teaching 97, so we good. Oh, the questions coming in from all directions. I love questions. I love questions. You always get your questions answered in my sessions. It's important to be able to answer questions as well, right? Okay, so we will be back in 5 minutes. See you all soon. You guys are the best team on this. Like, I would not miss a beat. Thank you. All right. Good old Dan. Dan's teaching the next classes. We're gonna bring him in. He's teaching the next one. He's gonna teach you all about cooking up a storm of those lean hogs. Right? That's the plan. Okay. When is the next lesson? It will be on the calendar. I think it is Monday, if I'm not mistaken. But I don't. Sometimes you just need to check that because sometimes it might be a Sunday by me, a Monday by you, or a Monday by me, a Tuesday by you, depending on when that falls. So have a look at that. I think it's Monday. Yes. Good. Okay, awesome. Okay, so again, any chart doesn't matter. I'm just replaying the random spots because I want to show you guys something. I spoke about understanding when a curve is likely to fail. Right? Somebody asked that question in the first session, and I spoke about when is a curve likely to fail. So I just wanted to show an example here of when a curve is likely to fail, and then also show you that you could see that, right? You could see it beforehand as well. It's not just a random thing, but you can anticipate when the curve is going to fail based on what the market is doing. So first, before I bring us to that curve, I want to help everyone quickly just to think logically about what the market does, right? The market isn't perfect, but generally, here's what it is doing. It does this move down, right? Then this move up, and then this move down. If it's a downtrend or starting a downtrend rather, that will be a impulse, correction, impulse, correction, impulse, correction. You see where I'm going with that, right? Impulse correction, impulse correction. That is generally what the market does over and over and over. Give me a 7 in the chat if you understand that. And then we're going to look at it from the other side, which is we go impulse, correction, impulse, correction, impulse. Okay. So that's our expectation of what the market is going to do, generally speaking. So now let's start thinking about curve over here, right? If there was no curve, and we take this off again, like this, and current prices over here, the rule state we ought to go down into the left to the nearest, not the best, not the clearest, not the cleanest, the nearest zone that fits the zone structure, right? There is a leg in, there's a leg out. Is it the best? No. Is it the perfect move out? No. Is it the perfect breakout? No. But we're going to keep it close anyway. And the reason we're going to keep it close anyway is because we're not setting our hearts on this curve. We are not taking out a mortgage with the curve. We're not marrying the curve, right? We're not having children with the curve and sailing off into the sunset with the curve. We're just placing the curve there. to give us a perspective of where we need to be concerned if trend reacts strangely, right? Everybody tracking with me? But what if the candle is not closed? Do we still use that one? No, we would not use that one if the candle is not closed, but this candle is closed because the next one starts there. So I replay the next one. So if the candle is not closed, good question, Cassandra, we would not use that because the same way would be for a zone. If the candle is not closed, we don't use it. The trend is not a breakout if we don't have a closed candle. So always have your candles closed. Very good question, Cassie, if I may use your nickname over there or your shortened name. Right? So then up into the left to the nearest supply zone. Again, be convinced in your mind that nearest is key, right? Nearest is key, and this needs to be quality. Have some zone structure, odd and answers. Don't believe me? Go back to the video. You'll hear Kayla says we doesn't have to be perfect, right? But we still want to keep it close because when we see it fail, it's a signal to us, right? Or when we see the trend starts to push through, it's a signal to us to tell us that now we have confidence that there is more room to one of the other sides. But the question was, how do we anticipate that the curve is going to fail, right? Look at me. It's been 6 hours, almost 6 hours of talking. That was getting dry. Okay, so looking at this, we have our curve high and our curve low. Now we'll talk again about drawing those curves. We'll get a couple of practices in on the actual curves, right? We'll do that. But right now, is everybody with me that this is our current curves and it is closest to current price? Are we okay with that? Right? Are we okay with it? Okay. Now our question needs to become: is this curve going to fail, or is this curve going to fail? Right? We want to understand what one is likely to fail. Will this one fail or will that one fail? Which one is likely to fail? For that, we employ an understanding of trend, not on the trend time frame in relation to this curve, but we look at curve as a trend time frame as well, and we even can look higher if we wanted to, right? Than the curve time frame. What do I mean by that? I'm not going to draw up a perfect trend now because I will teach you perfect trends in another session. But if I'm looking at this, I can generally see that though my curve is set up there, this is a what type of trend? What type of trend is that? Down, right? Okay, we all agree. It is a downtrend because I can generally see that trend, if the daily was my trend time frame, which it's not at the moment, but if it was, it would be a downtrend. Now, what do I know about downtrends? Well, I showed it earlier on. We get an impulse, a correction, an impulse, a correction, an impulse, right? Oops, a correction, an impulse, and then what do we get next? We get a correction. Oops, we get a correction. So let me ask you: now that we got a correction, what comes next? What comes next after an a correction, an impulse? I don't want to say reversal. Reversal is different, right? The reversal. This is not reversal. We want to say impulse. Why? Because we want to understand when it comes to a downtrend, right? The corrective side of the market is in the up or sideways side. The impulse is to the downside. In an uptrend, the impulse is to the upside, and the corrective side is sideways or back or down. And the impulse is up in an uptrend. This is not reversal. Reversal is W or M's. We don't want to get confused with that, right? And it's okay if you put it in there. No, there's nothing bad. I like when you say that because it gives me an opportunity to clarify something. Reversal means, the word reversal means the trend was in an uptrend and it reversed and became a downtrend. Or the trend was in a downtrend and it reversed and became an uptrend, right? Right? Or terminated the trend, yes. Okay? So now think about this. Now that we understand what this trend time frame is doing, the daily, if the daily was our trend time frame, right? If the daily was our trend time frame, we can have an expectation that the next likely thing to happen is for this curve to fail, right? But does that mean we just start selling here now? No, we don't. Because the daily is not our trend time frame. Remember, we were just looking at it to understand which curve will fail. What is my trend time frame? If my daily time frame is my curve, can somebody tell me in the chat what is my trend time frame? Here we go. Here we go, right? It's the 4 hour or the 60-minute. First, always, as a rule of thumb, when it comes to futures, first go with your 4 hour, then check your 1 hour. No, I would not short this, Richard. I would not short this because, and good question, I would not short this because of this, right? I need to know when my impulse or my correction will become an impulse. I need to know when my correction will become an impulse. How will I know that? How can I figure that out? That here's something I don't want you guys to do. You are not looking at the trend time frame. The daily is not the trend time frame here. We used a daily mock trend to determine what curve on this daily might fail. But this is not the trend time frame. Can we all say not the trend time frame? Please, let's not get that confused. You guys wanted a teaching on this? So I need you to follow along with me, right? We need to understand when is this impulse that we are in now. This is why I get what irritates me when people say the following thing, and especially on YouTube, it drives me insane. I cannot tell you how many times I hear traders say, look at the daily chart, right? And the daily chart looks like this, right? Like this. And then if I ask you, I want you guys to follow along this, right? If you looked at that zigzag on the chart over there, and let me make this lower, I think I do it too fast. What trend is that? What trend is that? Downtrend, right? You can all agree. I want you to catch this light bulb moment now. In a downtrend, should we be selling? Not sure if you were meaning me, but curve 1 day, trend 4 hour. Yes. Curve 1 day, trend 4 hour, first and foremost. Liz, I don't think I was meaning you. I'm not sure what you mean. Okay, so I want you to think, and yes, technically in the downtrend we should sell, but here is the thing I want you to see, right? When should we sell? A downtrend means we got to sell, but when should we sell? We should only sell when price is finishing its correction and turning into an impulse again. Because guess what? You try and sell here, price will just do this right through all your stops. And so therefore, we need to look for when a correction becomes an impulse again. So bringing us back to this idea, absolutely no, I will not sell here. I will not sell here because it hasn't given me the signal that it's ready to sell. Who's getting a light bulb moment here at the moment? Now I'll show you where the signal is, and this is why we need to understand that this is not the trend time frame. That's just the curve. Because on the daily time frame, drawing the curve, the trend time frame becomes the 4 hour. And if you look correctly, what are we in? Wait a minute. Looks like a what trend is that? Uptrend. Try and sell an uptrend, you get burnt. All right. Are we following now? All right. Are we following? You see? And so what do we then wait for? We wait for price to go into the opposing curve on the upside, which it goes there, right? Now, here's why you should have your curve on. Everybody pause, take a moment. If I take this curve off this chart right now, all you'll be left with is an uptrend. And you'd think that the next thing you should do is buy. Are you guys seeing? If I remove this curve off of this chart right now, all you'll be left with is an uptrend, and your mind will say it's time to buy. But because the curve is on, and we understand that the curve is the expected point of trend reversals, we wait to see if that curve will fail before we decide to buy further. Or we wait to see if the curve will tell us that it's not going to fail, which, let me show you something. Wait a minute. We were speaking about reversals earlier on. What is that? That's a reversal, right? What does that tell us? Is it time to short? Everyone was asking me earlier on, will I short? Now it starts becoming time to short, right? Because the trend is telling us that it's getting ready to turn around by forming an M. 100% of all trends that reverse with either an M or a W. Did you hear what I said? 100% of them. Not all M's and W's will work, but all reversals on every chart has an M or W. Right? We're getting there. When do I get rid of a curve? I get rid of a curve when the curve fails. There is a bit more that you need to this, which I might cover in other classes. Because if you're just going on the basis of surge strategy, it says a curve is removed when, well, it doesn't say curve is removed, but you could follow the zone rules. If you're more than 50% into a curve, you would say, okay, curve is canceled. Right? Remember the drawing earlier on the DIS? By this estimation, you should remove that curve because you've just gone into that curve like this. But if you do that, all curves get removed, right? You don't remove the curve like that. You look at what the curve is doing. Is it reversing trend, right? Is it changing the trend? Well, here's a signal here that it's changing trends Can't wait to teach you M's and W's, because not all M's that you see on the chart is M's, and not all W's you see on the chart is W's. They have specific characteristics, right? So I'll wait for price to turn. Now I want you to think logically with me. As price is approaching this curve at the bottom, right? I want you to see, let me just play one more until it touches it. Let me get it into that curve quickly. Okay, there. Now that we're inside of that curve, right? What type of trend are we on the 4-hour? You once told me I was the liquidity in the market for ignoring the curve and just trading trend. The house will get planted. It was beautiful. Never drew a chart without a curve first again. Dan, thank you for coming full circle with that statement. I believe that. I really believe that. Curve is always first. So now look at this, everyone. So now you agree with me that the trend is down, right? Here's the magic. The trend is down on the 4-hour, but this is the expected point of trend reversals. I have to judge, will this hold or will this fail, right? I have to decide whether or not this curve will hold or will this fail. Just because I'm on a downtrend on the 4-hour doesn't mean that this will hold, because the curve might turn it around and push it up. But when is that curve not inclined to turn it around and push it up? It's not inclined to do that when the higher time frame is inclined to continue the trend down. When the higher time frame went back into impulse phase, which was first established on the 4-hour by the trend reversal day, which now continues this phase down, then we are poised to see this fail. And that time, I would then allow price to go in 50%, right? And if it goes in more than 50% or closes in there, sorry, gotta go to the 4-hour time frame. If it goes on the 4-hour time frame, more than 50% in there, since the 4 hours my trend time frame like that, I would expect that to fail and then go through it. And so then I can trade it down. But all of that is only possible if I know where the curve is first, because expecting it to fail is also a skill. If I don't have the curve on, I wouldn't even know that I could expect that to fail. So maybe I would have thought that this becomes a good zone to buy. Maybe I was a 4-hour trader and I thought, let me buy this zone, right? Or I was a 4-hour trader and I said, okay, let me buy this zone. But what would happen to me is I'd get stopped out because I didn't know that from the higher time frame, I'm coming from a curve. The medium time frame, I got a trend pushing down, and the higher than that time frame tells me that curve should fail. So I should run through the zones. Write this down for your notes, that in a downtrend, demand zones are targets, not entries. In an uptrend, supply zones are targets, not entries. What do you mean? Let me show you. This is light bulb stuff here. When price is trending up like over here, because it came from this reversal day, now it's trending up. All these zones, if you try and sell it, you get chopped up. Why? Because they are targets. We're supposed to run them, right? We're supposed to run them. Who sees that? We are supposed to run them, right? Now, what about the other side? Well, when price turned into a downtrend over here, this, irrelevant, 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 irrelevant. But wait a minute, it's demand zones. Yes, it's demand zones as targets, because this supply gets offloaded in that demand. So we need to run through it. Now we're understanding a little bit more, right? Now we're understanding a little bit more. We'll do repetition. That's why I said I can't cover trends. I can't cover everything in one class, breakout segments, entry zones, all of that in one. I need to cover one thing at a time. I wanted to make it known to you all, right? Higher time frame. Brandy, if you're trading 60, 15-minute 5 hourly income, do you need to look at the curve differently, or do you have a secondary curve down for a 1,000-foot understanding? If so, suggest the time frame. Same principle here. If I'm trading hour 15 and 5, I'm just looking up to the 4 to check, am I not trading against a 4-hour trend coming through my hourly curve? Because this is the same, right? This is a daily curve trading through that 4-hour trend, right? Pushing further down. What do you mean by supply dumps and demand zones? Supply zones and demand zones. All of them might be an accent thing again. Did I say supply dumps? I think I might have said this supply is being filled here by this demand zone, right? It's being offset by that demand zone. Offloaded that demand. Yeah, that's what I meant. Offloaded that demand, right? Think about it. Supply, I have supply to sell, demand to buy. This supply sells that to that person, to that demand in the forms of that stop losses runs through it and targets that. This is why. Come on, let me give you another something really good and valuable. I'm gonna do the line drawings first. Okay, give me a moment here to draw this on. Got a supply zone over here. Got a supply zone over here. Let's say inside of this supply zone, there is 1,000 lean hogs. Right? See, I don't even know what the symbol for lean hogs is anymore. LH. We're calling it LH here today. We're using proper, normal English kind of stuff. Right? And over here, oh, this one's gonna offend some people here today. I'm not offending, but this is gonna really trip up your mind. But it's better that we get that understanding now. 1,000 lean hogs at this supply, 50,000 lean hogs at this supply. Unfilled orders, yes. Leftover orders. Which is the better zone to trade? We're going to call this chart A and that chart B. Which is the better zone to sell at? Come on, let's all put something on the chart here. I'm going to help somebody today. Okay, have we all participated? I hope you guys are appreciating this. Again, I would ask. I hate to always keep asking, but it does help Surge and help submission. So if you have a moment, you can drop a review. If you found value. If you didn't find value, don't drop anything. All right? If I didn't help you, and don't drop anything. But if I did, please, I'd appreciate it. If your answer is B, you'd be wrong. This will be way better than this. In fact, if I change this number here to 500,000, I'd still sell this one and not that one. You know why? Because we only sell in a downtrend. This is a downtrend. By the time we reach this, we'll be in a very strong uptrend. And guess what? The objective is to break that zone, not hold it. Trend has changed. Here's your trend reversal. This one, hold. I was drawing on the specific zone, remember? Which one is better to sell? No problem, Holland. You guys see what I'm saying? Right? Selling at supply means you're selling at a down. No. Selling at supply does not mean you're selling in a downtrend. This is still a supply zone. Right? We ought to sell supply in a downtrend, but selling at supply at all times doesn't mean that we're in a downtrend. We need to establish trend, which is separate to supply. Supply is the type of zone, trend is the type of direction, right? Selling here is good, selling there is bad. So you're saying you're going to hold those lean hogs to sell even higher? Yes. Yes. Are you guys seeing this? So let me give you a light bulb moment on this. What zones are you supposed to trade? You are supposed to trade the zones that are closest to your current price, aligned with your current trend inside of your curve. It's because we moved far, but not just that. Far is not enough. But great observation, Holland. But far is not enough. We need to understand trend dynamics. There's a reversal in play. There's two phases of a trend up. That zone is a target. Don't believe me? Look at this. Right? If I was to take this chart back here, let me show you. Let's be honest. How many of us would say, wait a minute, there's a nice zone over here? Doesn't that look like a good zone to trade? I'm coming to that, Ketan. Thank you. Thank you for putting that question back in. I'm coming to that. Looks like a good zone to trade, right? And we need to understand it is a bad zone to trade. Why? The trend is up. Its objective is to cut through that, Now you're asking yourself, wait a minute, why is it even working here? There's no good zone there. Because on a higher time frame, this is a zone. None of these lower time frame zones matter. So Ketlin, even here, this is what I was referring to. You can find a curve, which this is. You can find a nice zone inside of a curve. You try and trade that, you'll get cut up. You don't trade far left, you trade immediate price action, closest to current price. You don't trade the far left, you trade here. The only time you trade the far left is if you can go up to a time frame that makes this the current left, which is the daily. Now it's the closest to current price, right? But if you try any zone inside of a curve like that, you'll get chopped up because its objective is still to cut through all of those zones on the lower time frame. You should sell at supply zones in a downtrend, yes, Stan. Good, right? Selling at supply in an uptrend is not using search strategy rules. I agree. There's no rule in search strategy that ever teaches us to sell at supply absent of knowing what the trend is. So the key is to start at a higher time frame to work our way to the lower time frame to set our trade. Yes, Harlan, because the rule for search strategy states that we started our curve. The curve is in any case the highest of our 3 time frames. We work ourselves down to trend. We work ourselves down to check the breakout segment to make sure the trend has the breakout segment. By the way, you don't even have to take an entry on a lower time frame. That's also a misconception. Search strategy says the following. It says your entry should be on a time frame equal to your trend time frame or lower. What does that tell us? Your trend time frame can be your entry time frame as well. Another light bulb moment for someone. Did you know you can trade 2 time frames? Right? This applies to all assets, not just futures, everything. Yes, Dan, correct. Everything. 2 time frames is okay to trade, not 3 time frames. In fact, most times, if you're on a live with me, what you're going to see is I take my trade off of the trend time frame entry. There's a reason, but we'll cover that in the entries classes. I might refine it into a zone inside of there, but always going to first make sure that it's on that trend time frame. So again, to the other question about trading curve zones. Let's say this was a curve. I like to draw the line drawing so you guys can see it more clearly and then apply it to the charts. Let's say the price was doing this, right? And then does something here and now goes up like that and now comes back into that. If, and the bottom was, let's say the curve here as well. If we try and sell anything out of here just because it's on curve, we're going to get stopped out most of the time. Because what price is going to do is going to run through all of this, right? Because it's got demand to offset with supply, right? And then create an M and then come down. And then when it creates that M and comes down, you're going to see holds a zone, holds a zone, holds a zone, holds a zone, goes down. But if you try to sell that once just because it's in the curve, you get stopped out. When it turns around, then it doesn't stop you out. Wait for confirmation at the curve. Wait for confirmation at the curve. You sell here, you'll be selling in supply, but you're selling in an uptrend. You need to sell in supply in a downtrend. Write it down, everybody. Sell in supply in a downtrend, buy in demand in an uptrend. The rules are not buy in demand, sell in supply. The rules are buy in demand in an uptrend, sell in supply in a downtrend. At what point of the M formation do you jump in the trade? When it comes to M formations, we can only jump in early if it's from a curve. If it's not from a curve, we cannot jump in early. What do you mean, Chadwin? I mean this. If that's your curve supply and this is your curve demand, and I'd encourage everybody to draw themselves some line drawings like that as well. Let's say price comes down like this, hits this one, goes up like this, and turns over here. This is not a downtrend. Even though it closed below that, even though it broke below that, it is not a downtrend. It is a terminated uptrend. And 9 times out of 10, what will happen here is price will go right through this again, hit that, break down. This M is not sellable. This M is sellable. And the reason this M is sellable is this M originates from the expected point of trend reversals, which is called a curve. And this M originates prior to hitting the curve. So that's a fake M that I don't trust. I trust this M, not that M. So at which point will I get in? Only when the M has closed, not wicked, closed with a body candle beyond this point. That confirms an M, which means I can trade out of there, down, and every continuation as well on the way down. Wait at the zone, yes, for a turnaround. There is a trend there. I'm not sure what you mean, Liz. There's a trend there. If I were in a long trade, at which point would you know to exit? If we see an M before the opposing curve. Well, if you were in a long trade, right, and you see an M before opposing curve, the question becomes, where did you get in the long trade? Because the rule state, let's say I got into a long trade here. No, sorry, I can't get in a long trade there. I can only get into a long trade here. Every time price breaks a new high, we get a new controlling swing low. So my trailing stop moves there. If we break there, my trailing stop is there. If we break here, my trailing stop is here. If we break here, my trailing stop is here. So I wouldn't need to figure out when I'll get out because I'd be stopped out right there. Does that make sense? I was just going along with the last section. That's good at the top because there's an official trend. This is also not a trend. Let me just say that this is also not a trend. I think I need to clarify that for you guys quickly. Also, by the way, surprise, surprise, insert strategy on demand. Everybody thinks I'm making up genius stuff here, but it's literally been there, and I'm only giving credit where credit is due. This is a terminated uptrend. That is also basically a sideways market. But the reason we can trade this is because it's originating from the curve. You'll hear Kayla say in that video that if we wanted to get into a trend early, the only time we can do that is get in when it's a reversal at a curve point. Any other point would not be able to be done. So, for instance, if this market was going to trend up again after hitting this curve here, if this market came down like this over here and did this, no trade. No trade from this, no trade at all. Even if it was sitting in something perfect over here, no trade at all because it didn't hit the curve. If it hits the curve by doing the following, now this area that was no trade becomes tradable. Why? Because what is curve? The expected point of trend reversals. Did we reverse this trend yet? No, this is just a reversal signal, which is a W. The actual reversal comes at the second phase of trend. This is now a confirmed reversal because of a continuation. So here we can trade up, but because it's coming from curve and we expect it to reverse, we can take the first trade as early as here when price hits it. I never use automated trailing stops. Richard, never. I don't believe in it. It's also never worked out well for me. It just comes back and grabs me every time. I only use, depending on how aggressive I am in the market, I use either my entry time frame controlling swing lows or highs, which the entry time frame really doesn't have controlling swing lows or highs, but we treat it as such. But mainly trend time frame controlling swing lows. In an uptrend, trend time frame controlling swing highs. Wait, if a higher time frame is created on a new curve on the way up to the higher time frame zone, then we'll put on a new curve. It creates a new curve gets placed. In the next class, please can we do lots of examples? Will you be able to explain this again? Yes, I'm gonna keep adding extra stuff, but also revising everything. Right? I promise to do that. I'm gonna keep. You guys will have curve questions again. You'll have trend questions again. I'll keep going over it. Right? I'll show you more and more examples. So I want you all to draw line drawings for yourself like this. And then the recording is available, so you should be watching it. By the way, let me just say something to that effect. You're almost never gonna learn on a live class, right? It's a lot of information. You need to slow it down. You're going to need to take every live class, learn as much as you can during that live class, then go back to it again and re-listen to it again, and then you'll learn. Right? Now, if I'm a bad coach, I'll just tell you, yes, you'll always learn something by just coming to the live. That's not how it works. You need to slow it down, be diligent, rewatch. Repetition. Nobody will get this in the first way. Nobody will. And I wouldn't lie to you ever to tell you that will happen. I will answer all your questions so that I can make sure that everybody gets covered, and we'll do repetition, but we have to go back. Right? Yes, the live class tells you where to go back to in your notes. Yep. So we need to make sure that we're only trading. And remember, you guys are pulling me into 10 dynamics now, which is this. But curve is first. Curve is the granddaddy of everything, right? I'll just show you now. And again, I want you to think of curve. For those of you who are memorizing this stuff, don't think of curve as price has to turn there. That's not true, right? Price doesn't have to turn at any curve. We just have curve on to tell us whether or not price will turn, possibly. Like here's an example. If I was looking here, I would go up, right? And to the left of the nearest supply zone. Drop, base, drop. Draw it week to week, right? And then go down into the left to the nearest demand zone. Drop, base, rally. Draw it, let me see here. Week to week. Well, I'll teach you more on zoning because you might be confused by why I'm doing that there, but you'll learn that, right? To your guys' points early on the DIS, price went up. Now we can ask ourselves, is the trend on the higher time frame poised to possibly go up? Yes, it possibly could. But if I get through this curve, then I know it's going up, right? But I could also get this curve and become an M. How do you know when the M is going to start, right? How do you know the M is going to start? Good question, Bandy. If it never reaches your curve, firstly, check your correlated asset class because it likely has reached your curve and you only need one of them to reach the curve. But I'm not going to get in the correlated asset classes too deep now, but I'm just write that note down. So when you guys ask me again, I'll cover it, right? Because likely has reached your curve. But in the event, see, it's all in the rules of search strategy. In the event, wait, let me first finish this. That would be the curve, right? And now when we play price up, price trades through it. It doesn't mean that that will always be the point at which price will trade through. We don't know, but we should treat it as such because it might become the point that price trades through, dailies or 4-hour. So let's see. Price hits that. Now, do you guys see an M? Do you guys see an M here? Yes or no? I'm going to answer Bandy's question now. Do you see an M? Right? What about this? What about if I draw on this? Do you see an M? Yes or no? First of all, you should never look for a W in supply. There's no W's in supply. There is no M's in demand. Even if it looks like there's an M, you don't even regard it at all. There's only M's in supply and W's in demand, right? So someone says that's a Funko weirdo M. There's no M here. And the reason there's no M here is to the rule I gave you all early on. Unless we close below this midpoint, there is no M. So you know what that tells us? Having that curve on now tells us we're waiting for an M. We're waiting for an M. We never get an M. What does that tell us? This is going to fail. See how having that rules make a massive difference because I don't see an M here, right? In fact, which one of the three is the M that you'll trade? This is number 1, 2, 3. Yeah, you guys have all been caught out. Most of you have been caught out here. The only M tradable is 3. Broke the midpoint, did not break the midpoint, did not break the midpoint. Not an M, not an M, is an M. This is going to stick with you, I promise you. Once I get to the M's and W's classes, you're going to see a lot of what you thought was okay was not okay, and a lot of but we're gonna have solid rules. So I'll add M's and W's in there. We're gonna have solid rules. You're gonna understand, and that's why I tricked you all. I knew if I draw this big enough, you'll believe it's an M. Throw that small enough, you won't believe it's an M. Always assume I'm tricking you. Right? See, it doesn't close beyond the midpoint, doesn't close there. It is not an M. Let's do it again. This time you're all gonna get it right. Right? It's easy. Move it over. And we'll draw the other one here. One, 2, 3. Which one is tradable? Here we go. 1 and 2. Broke, broke, no. Right? Important. And again, write this down for your notes. Not with a wick, must be a body. Now, to the last question over there, what happens if you never reach the curve? Good question. That is supply, and this is demand. And now price does this, right? It's that, comes here, misses the curve. In fact, let's make it even more drastic. Misses the curve here, right? But later on, you come to the market and you see that it's done that. And you start praying against me because you said, man, he said, don't trade the W if it doesn't come to the curve. I need to pray against him, right? Let me pray against him because it didn't come to the curve. He's not with the Lord. Look at this that I missed. And if I keep waiting on his rules, it means, you know what some people are doing? They're saying, If I trade your rules, it doesn't work. But it's not my rules. It's strategy rules. Not sorry, they don't say if I trade your rules, it doesn't work. They say if I trade your rules, it feels like I have to wait all the time and I don't get the trade. It's not my rules. It's strategy rules, but I can tell you that it keeps you safe. We don't trade everything. We trade high probability, right? We trade high probability, and you've got more than one chart. And once you get this, you can apply. And I showed in the previous Futures Live online how to draw up 5 charts with trend and curve and breakout segment all in under 30 minutes and be ready for the market. Would like to know how to do that, right? I'll show you how to draw up 5 charts, 5 different markets with all having your curve on, all having your trend on, all having your breakout segment and your zone selected all in under 30 minutes, right? I'll never tell you when, Tony. You have to come to all classes. Right? That's that Law and Order sound again. Dum dum dum. Right? So, to Brandy's question, when can I trade this? If I never hit this, I can't trade it anywhere in here. There's a zone. No, no, no. If here's a zone, no, no, no. But when price breaks there and price breaks there, even though we did not hit curve, we do have the other criteria that meets trend requirements, which is we have 2 breaks in the same direction, making that an uptrend, and therefore we can trade here. So if it never hits the curve, we can trade over here because we have 2 phases, right? That's where we can get involved. But if it does hit the curve, we can get in early over there. So strategy for futures is really the same strategy used for all assets exactly. There's slight variations for Globex market, and those things we'll learn about in here as well, right? But I hope you guys are getting it. I hope you're seeing, right? I hope you're seeing something here today. There's still more trend dynamics. I'll teach you in the trend class that not all trends are trends, not all 2 breaks are breaks. In fact, not all controlling swing lows are controlling swing lows. Would you like it if I tell you objective ways to see the same controlling swing low every time you draw up a chart, and objective ways to see the same controlling swing high every time you draw up a chart? That's what I want to show you. Ladies and gentlemen, we've reached the end of the 3 hours. I'll hang on. I'm going to let Mandy go. Mandy needs to go. I'll hang on another. I promised you guys earlier when we were praying that I will give you guys some extra time back. So I'll take another questions here for the next 10 minutes or 5 to 10 minutes, and then we'll call it a day here. But hopefully this has been good. Brandy T says, thank you that I'm in this class. Thank you, Brandy. I appreciate that. I appreciate you all. Again, I might answer. I just want to say I might answer questions very strongly. That's only because I get excited, right? But I definitely like having questions. Right? Yeah, futures Dan is absolutely right. Futures is faster than many stocks. I'm not going to knock any stock trader. I traded stocks before, but I'm going to say stocks is too slow for me. Right? It's too slow for me. Stocks is more so investment. It's the reason I don't trade crypto anymore. I can trade it and I still look at the charts, but I don't like to trade it because if you invest in one thing and you try and trade it, it messes your mind up. Because you never want to see it go down. You never want to see it go up, you know? Stephanie says, I think I'm done for the day. Coffee kicked in. I'm ready to start. Mandy, you're funny. Coffee kicked in, man. He's ready to start the class now. Wants to go another 3 hours. Oh, that's funny. Thinking from FIOs. No, I just wanted to make sure that everybody's well served. Crypto is so volatile, drives you crazy. Yeah, the problem with crypto is it's very news dependent at the moment. And so you can have clearly nice zones, but any day can be like an NFP CPI day. Can we place a couple of more curves? I'll do that, yes. He has to go play with his birthday boy. My birthday boy went to sleep. In my 10-minute break, I went to give him one last hug and a good night. I said to him, I'll spend some more time with him tomorrow. I'm going to take him out again. He went to sleep. The turn of the year, I've been wondering what the thoughts are going to be on crypto. Yeah, we're going to have to watch the news on crypto, right? Do we treat the contract like a stock? No, not exactly, because the stock is more long-term investment, no expiry dates, contracts expire, and also the timing of the markets are different. Let me go. Please spend a little time on curve level, like curve is low or higher in the middle. Okay, let's do that. Let's do that. Let's do this. Okay, so I'm just gonna do this randomly and take the chart, play it somewhere, and reset the chart. And now we'll draw a curve on from where we are, right? So if we're looking at this market like this, and current price is here, we'd go up and to the left to the nearest supply zone there, down and to the left to the nearest demand zone here. Grab my little quadrant GAN box draw it from the absolute high to the absolute low, and then judge based on this, where are we? Since we are here, this is retail, this is wholesale, this is equilibrium. So based on where current price is, we are at equilibrium. So you want money buy, Stephanie? No problem. Did I understand this correctly? If a W goes into a demand zone, then it's a good time to take a trade once it breaks the midpoint. Yes, if that demand zone is a curve point. If it's just any demand zone, it doesn't matter. However, if a W forms above the demand zone, then look for 2 breaks before trading. Correct. Right? Correct. When we do it together, I see it every time, but on my own, I don't always see it. You know what it is, Terry? It's not that you can't see it; it's that you don't have the confidence in that moment because you haven't done it. You didn't believe that the curve was that point, or it's failed a couple of times. You didn't know why it's done it. My suggestion is whether your curve fails or holds, draw it with the rules because we can fix the other things if we got this right. But if we change the curve, then we're changing the 10, then we're changing the breakout segment, then we're changing the zone because everything might be on the wrong place. Right? I do think you are able to do it. Right? If price is in equilibrium, we need to ask ourselves, a price in equilibrium means nothing on its own. We need to ask ourselves, what is the trend? Because if the trend is down and we are in equilibrium and we are high on the curve, if the trend is down and we are in equilibrium, we could still sell. But the best places to sell is from the high of the curve. And the high of the curve, everyone, listen carefully now, is not the curve zone, right? It's in this red box. The lower the being low on the curve is not here. It starts there. It's in the lower quadrant. So that's low on the curve. Right? Equilibrium means what? It means that price tends to go sideways. So you don't really want to trade there, but you can trade there if you expect this to go. Right? What is the tool that you are drawing the REW with? It is the brush tool. So if you go from the top, 1, 2, 3, 4, 5, 6, 6 from the top down. And the reason I'm counting 6 and not just telling you look for this one is because yours might not be on that one. It could be on any other tool here. It could be on a highlighter, it could be on an arrow. So we count 6 down and then we go to click that and there. It's the GAN box, yes. Let me give you the GAN box settings as well. There you go. 0, 0.33, 0.66, and 1. You don't need the 0.5. I just have that in because I like to know where the exact midpoint is. But you only need 0, 0.33, 0.66, and 1. When you put your GAN box on, it will look nothing like mine. But when you change it to these settings and save that settings by going over here and saying save as, it will look like that. Right? Take a screenshot of that. Do you know when the recording of this class will be ready? I need to watch this over and over. Mandy said she's going on holiday, so it'll only be ready about 2 weeks from now. Right? Just kidding. Takes about half the total class time for the recording to finalize and be uploaded. Right? How do I get to the settings of the GAN box? Okay, we do this. Let me just check what GAN box I'm on here so I don't throw mine. You know what? I'll just make another one if I need to. So when you draw on the GAN box, right, you're going to get a bunch of different lines with a whole bunch of different stuff, and it's going to probably be blue if I remember correctly. I've had this for years, so I'm not sure what color it's going to be, but I think it's blue. You draw it on anywhere on your chart, and then you just go ahead and double click on that GAN box. It will take you to this screen. You click on style, and then you type in 0, 0.33, 0.6, 6, 1, and 5. You can choose to make your background darker or lighter, like that. If you select background, you can come down and choose to use one color. I like to use 3 colors on the GAN box. And then when you've done all of that, be sure to click this drop down over here, hit save as, and then name it whatever you want to name it. MBA, massive bank account, right? Whatever you want to name it, but make it descriptive to you. And then go ahead and save it, and that should save the settings on the chart for you. Terry, my pleasure. Thank you for saying that. Okay, we are 10 minutes over. I'll do one more. We can go zoom out, random place, reset chart. If I'm here, now I would say this: in order for you to draw your zones correctly, you must understand your leg ins and leg outs. Also, I'm gonna give you a light bulb moment right now. Is the last thing on zones. Search strategy never tells you to look for a base. It doesn't tell you to look for a base, but 90% of us, our eyes are tuned to go and look for a basing candle, but it doesn't tell you to do that. It tells you to look for a leg in and a leg out, and then in between the leg in and the leg out is the base, right? So we'll talk about that again, but this would be my curve. Up and to the left to the nearest supply zone, drop, base, drop. Down into the left to the nearest demand zone, drop, base, rally. Anything over here would be considered cutting through candles, right? Okay. Joey Ice Cream Terry, we got 2 minutes left. And I'll do another one. All right. Replay anyway. Reset is a nice one. Down and to the left to the nearest. Isn't it fun to actually have a rule that's so objective that you don't have to look anywhere else and start guessing? You just do exactly what it says. Down to the nearest demand zone, up and to the nearest quality supply zone. Now you could go here, but I'm not going to go here because one, two, once, twice, three times a lady. We move ahead to that one. Right? There's my curve. Okay. Here we go. Thank you, everyone. I like the song. Reminder. There we go. Thank you, everyone. Thank you, Mandy, for sticking on with me. Mandy really didn't have to stay this long, but we appreciate having Mandy here. I shall see you all on Monday. Hopefully that was good. You learned some things.